When I mention the word invest, what comes into your mind? I'm sure your mind will take you to the complex graphs and stock markets, right? Well, that's something to be expected, because the first thing that springs to mind when you think of investing is the intricate realm of the stock market. It's easy to become confused with so many charts and data, so let's break it down and make sense of it. Assume you have developed a firm and now require additional funds to expand. Or perhaps you simply desire a private aircraft. Where do you acquire your money? Here's an idea. Divide up your company and sell a portion of it while keeping majority to retain control. That is the purpose of the stock market, and this process is known as the initial public offering, also known as IPO. But how much money can you expect to make? Take for example, Mark Zuckerberg's little toy, Facebook. It went public in 2012 with 337 million shares priced at 38 cents each. Not terrible, is it? But when he learned how many more people wanted a piece of his pie, he added another 84 million shares, which resulted to a grand total of 421 million shares. What's more, guess what? He sold all of them for a total of $16 billion. He became a billionaire in a matter of hours. In reality, the stock price rose to $45 on the first trading day. Facebook appeared to be doing well, but it was too early to celebrate since it had dropped back to $38 by the end of the day. And that was just the beginning. The horrible news was just getting started. In the following weeks, the stock plummeted to as low as $20, twice as cheap as its original pricing. To comprehend what is happening here, we must first understand the stock market. Historically, stocks were purchased solely for dividends. In theory, when you buy a store, you become the owner of that corporation. That is, you are just like any other owner, having the right to the company's profits. So, I guess congratulations will be in order because you purchased 10 Facebook stocks in January of 2017, and you are now the sole owner of Facebook, just like Mark. So, your Facebook company earns $15.934 billion. How much of that is actually yours? You've spent $1,300 on your 10 stocks by the end of the day, the Facebook stock price in January of 2017. But first, let's look at how many stocks there are in total. There are over 3 billion of them, or exactly 2.956 billion. I doubt your 10 stocks are essential right now, but let's be optimistic. Because if we divide the net income by the number of shares, each stock should earn slightly more than $5, which is exactly $5.39 when we divide $15.934 billion by 2.956 billion shares, which is known as the EPS, or earnings per share. In other words, your 10 shares are expected to earn you around $54, or exactly $53.9. Not so terrible, is it? But that's only hypothetical. In practice, you actually get nothing. The board of directors will be the ones to determine what to do with this money. And because their primary aim is to line their wallets and build the company, no one cares about your 10 stocks. But don't worry, not everyone is a con artist like Mark Zuckerberg. For example, Apple paid $13 billion in dividends, or exactly $12.769 billion, last year, or $2.5 per share, $2.46 to be exact. Of course, it's not much for a $170 stock, but something is always better than nothing. However, it no longer matters how much the corporation pays as much as the stock price. Within a single year, Apple investors saw a 33% increase. That is far better than the market average, around the range of $120 to $160. You've undoubtedly heard that Apple is the first firm to achieve a $1 trillion valuation because of its stock price that has surpassed $200. But what if I told you that until June of 2014, Apple's stock price was actually $645? Does this imply that the corporation is worth more than $3 trillion? Oh my goodness, the stock market is so tricky. Allow me to explain though. Stock splits are a type of stock split. Each stock was divided into 7 pieces, and the prices were reduced accordingly to around $92.7. Technically, nothing has changed, but more people can now afford the shares and join the Apple investment community, since it is evident that the stocks now only cost $92. However, not all businesses do this. Some, Warren Buffett, want to work only with serious people. Berkshire Hathaway has never divided its stock. It only has 1.68 million shares. But Apple has 5 billion, or exactly 4.91 billion. It's also why a single Buffett stock, or Berkshire Hathaway, costs more than $300,000. Most of us will never be members of Buffett's secret investors group. But don't worry, Buffett would be happy to take your money as well. That's why he developed Class B shares, which are less expensive and cost roughly $200. The stock market is a never-ending topic, but we have reached the end of today's video. Please leave a like and comment down below. And don't forget to click the subscribe button and the bell next to it. Thank you for watching. I'll see you in the next videos.